day, everyone. You're welcome to this week's Business and Investment Tips program, a production of RCCG Christ Church Radio with Ayodeji Ebo, an investment professional. This week, we present our take on the federal government's 2023 budget proposal. President Muhammadu Buhari presented the 2023 budget last Friday, early enough to uphold the January to December budget cycle for the fourth consecutive year. The proposed 2023 budget was tagged Budget of Fiscal Consolidation and Transition, as we expect a new government to implement the budget from May 29, 2023. The budget figures were based on assumptions which include oil price at $70 per barrel, oil production at 1.69 million barrels per day, the exchange rate at 435.57 naira to $1, projected inflation rate at 17.16%, and a projected growth of 3.75%. The assumptions are largely optimistic given the current challenges, hence, it should be an uphill task to meet up with the budget expectations. The proposed 2023 budget expenditure is 20.5 trillion naira, a 20.5% increase over the 2022 approved budget. The expected 2023 revenue is estimated at 9.7 trillion, which is 9.4% lower than the approved budget for 2022 due to the lower projected oil revenue. Recurrent expenditure, which is debt and non-debt, was projected at about 71% or 14.6 trillion naira of the total budget. The revenue is projected based on expected income/receipts from the sale of crude oil, taxes, duties, and income from government-owned enterprises. Oil revenue is projected at 1.9 trillion naira or 19.7% of total revenue, while non-oil revenue has been estimated at 2.4 trillion. The balance of 5.4 trillion naira is expected to come from other revenue sources, including the operating surplus of ministries, departments and agencies (MDAs), and government-owned enterprises (GOA). The budget/fiscal deficit, which is the difference between the projected expenditure and revenue, is expected at 10.8 trillion naira for 2023. Our take on the proposed budget. 1. The budget assumptions are largely optimistic given the current state of the domestic and global economy. Specifically, meeting the projected oil production of 1.69 million barrels per day would be a tall order given the current production of 1.3 million barrels per day. Also, the projected average exchange rate and inflation rate are unrealistic given the recent trends. 2. The projected growth of 3.75% is achievable, but shows a lack of ambition given the high poverty rate in Nigeria. Nigeria needs to grow at between 5 to 7% annually to experience an improved standard of living. 3. Despite the revenue challenges, underperformed by 37% as of July 2022, government expenditure has continued to rise on a year-on-year basis, specifically emphasizing the high and unsustainable cost of governance. 4. Due to the continuous expansion in both domestic and foreign debts, as well as the devaluation impacts on foreign loans, projected debt servicing rose by 75% year-on-year to 6.3 trillion naira. Debt servicing is the cost of past borrowing. Debt servicing accounts for 31% of projected expenditure and 65% of projected revenue in 2023. This raises debt sustainability concerns as most of the debts are channeled to non-productive sectors, that is, recurrent expenditure. 5. Personnel costs account for 24% or 4.99 trillion naira of the total budget and about 51% of projected revenue, implying that the federal government spends too much of its resources on the small share of federal government employees relative to the total population. 6. Sadly, projected capital expenditure declined by 10% year-on-year, and its share of total expenditure dipped to 26% from 30% in 2022. Capital expenditure is the portion that benefits the larger proportion of the economy and aids economic growth. For effectiveness, The funds should be structured primarily as counterparty funding for private sector-driven projects. Also, the federal government should accelerate the kickoff of the Infrastructural Corporation of Nigeria (Infracore) to mobilize the resources necessary to reduce the infrastructure gap. 7. Due to the optimistic revenue projection, the actual budget deficit will significantly be higher than 10.8 trillion naira, which means projected new domestic borrowings of 8.9 trillion naira will be exceeded. The federal government is expected to finance its deficit domestically, unlike in prior years. Foreign borrowing is not only expensive, given the high interest rate in the Eurobond market, but developing countries are also finding it hard to increase Eurobonds. 8. The federal government has indicated its intention to eliminate petroleum subsidies in 2023. The decision will mainly rest on the new administration, given the expected change in government. Overall, the budget is not expected to deliver any meaningful economic growth, given the continued revenue challenges amidst rising debt servicing and poor expenditure priorities. We expect a speedy passage of the budget before the end of the year and onward ascent of the president. Please note that this is the federal government's budget and not the budget for the states. Thank you for listening. Please join us same time next week for another interesting and insightful session. For comments and feedback, kindly forward to ebo.ayodeji@gmail.com or send an SMS to 070-8246-3747. Stay blessed.